Okay, good morning, everybody, and welcome to iTOOsday. It's our first iTOOsday of the year, so it's really good to be talking to everyone. We're going to give everyone just a few minutes to get on, and we're going to get going in a few minutes. So great to be talking to you all. Caesar or Shazia, can you just give me a test that you can hear me okay? And we're ready to get going soon.
Yes, we can hear you.
Okay, good stuff. Good morning, all of our brokers, and good morning to iTOOs and partners and brokers from around the country. I hope we've got anyone in from Africa. The number of people joining is growing. So let's give it a few minutes, and we're going to kick off in just a couple of minutes, in a minute or so. Can anyone say hi on here? It would be great to hear, if we can hear from anyone from Cape Town or Durban, or anyone that is from Africa or international. Good to have so many people from all around joining us.
Hello, Justin. We're dialing in
Hello,
from the office.
Hello, good Justin. Stuff. Hello, Tove. I see we've got Samantha Dreyers coming up.
Yeah. Hello. Good to see everybody.
Good to have Patience, is our new head of people that's joined us. So
hello.
We've got some of the friendly R2 people team. And lots of people joining. So I think you're all excited to hear what Daniel Silke, our expert today, has to share with us. Okay, I'm just waiting for everyone to join, and let's get going in a couple of seconds.
And Justy, maybe worth mentioning that brokers can now turn their cameras on and their mics on. So we'd love to see them, their faces for the next maybe 2 seconds. If everybody can just give us a wonderful iTOO hello.
Okay, brokers, you heard that. So if you can turn on, say hi quickly, give us a shout out, and then we're going to turn off all of your cameras and mics, and we're going to get going. Okay, welcome everyone, and let's get going. We've got a lot of interesting stuff to get through today. So let me do a little bit of an introduction to all of you. So first of all, I love this time of year for me, and at iTOO this is an important time of year because it's a year when we come back from the holidays, we're rested, we're refreshed, and we start to think about what does the year ahead look like. And as iTOO, our expert team goes away next week, and we go away for the week, and we think about everything that's going on in our business, and we have a really big, important strat session where we set the tone for the year, and we start to think about how do we need to adapt our strategy for the year. But one of the things that we do in doing that, and before doing that, is to try and take a temperature check of what's going on in the world around us. And to do that, we always like to talk to an expert, to have a look at what's happening in the politics of the world, what's happening in our economy, in the global economy, and in our economy here in South Africa. And Daniel Silke has become a friend of iTOO. He's someone that we've spoken to with on the past a few occasions. He's someone that's spoken for us to many of our brokers at a few of our functions. So Daniel, I'd like to say a big thank you for joining us again today. And I'd like to say to all of the iTOOers and our brokers and partners, I'd like to bring you into some of our strategic thinking for the year ahead by sharing with you some of Daniel's expert opinions and views. And if we have some time, maybe I'll give you some comment on how I think this is impacting iTOO and our industry. But let's see how the time goes, because I know that Daniel has got a lot of interesting insights to share. Some background on Daniel. He's got a master's in politics. He's our director of the Political Futures consultancies. He's written a book called Tracking the Future, which is key trends to watch out for in the South African and global economy. So he's written a book on this stuff that he's going to be sharing to you. And I think what really I like about Daniel, he's really good at taking what's happening at insights in politics and insights in the economy and weaving these together to tell us an interesting story. And I personally am going to be using some of these insights of Daniel to shape the strategy of iTOO and shape how we respond and gear up for the year ahead. And I hope that all of our brokers and partners out there will also do the same. Let's use some of these insights to say, how do we respond and gear up for the year? And one thing, if you know iTOO, you know that we're going to be responding fast to the changes that are going around us. And I hope for our brokers, this gives you even more reason to do some business with iTOO. So I'd like to say thank you to all of you for joining us for the first iTOOsday of the year. We've got well over 500 people on this Teams call and growing. And I'd like to say a big thank you to Daniel for taking the time to share some of your insights. Daniel, I'm going to hand over to you now and invite you to share your presentation. So to all of our brokers and partners, sit back and enjoy. And at the end, we'll hopefully have a few minutes for any questions that you may want to ask. So thank you very much, Daniel. Great to have you with us.
Thank you very much. I've hopefully got the presentation up in front of me. Justin, just want to give me a thumbs up that you can see the screen in front of you. Lovely, and you can hear me. Well, good morning, iTOO. Great to be with you again. Thanks, Justin, for the invitation. Good to be back, I might add, and good to see that there are so many. Well, I believe there are you all there. So you have to be there. It's one of those things with virtual. There you go. A few thumbs up. Marvelous. Good to see the thumbs up. Hopefully you'll laugh in the right moment and you will cry at the right moment as well. Use any emoji that you can. Now, indeed, it is a new year, but good heavens, what a series of events there's already been from a global perspective. And no doubt the global issues impact us in South Africa and will over the course of the foreseeable future. When I first started to do presentations, South Africans really were quite insular. They kind of only looked at themselves. And they didn't really understand the impact of what's happening in the outside world. I think today we all understand that what happens outside of our borders is critically important, and as we can see, becoming even more important in impacting domestic, both political and economic outcomes. So you'll see some of these references as I go through the presentation. There's a lot to get through. There are a lot of charts and graphs. You don't have to take notes. If any of you want some of these charts and graphs, I'll be able to give you an edited highlight version. If you can't sleep tonight, I will be able to get that to you. So I just want to begin by, using a quote from, someone who I wouldn't normally quote, to be perfectly honest. I do regard myself as something of a capitalist, but to use Vladimir Lenin as your opening quote is perhaps unusual, but I think it sums up where we've been from a global perspective in the world. And Lenin said, or at least it is ascribed to Lenin that he said this, there are decades where nothing happens and there are weeks where decades happen. And for goodness sake, we're only 4 weeks into this new year, and you only have to look at what has happened. Now, a lot of what has happened has been as a result of the second term of the Trump presidency. Not so new president. I mean, he was there before. I do like this video of his dancing abilities. It's about as good as me, so I might not admire all of his policies, but I do have an affinity to his moves on stage and being brave enough to do that. The Trump administration certainly has unleashed a whole set of new consequences for the world, and there are other issues that are not necessarily just Trump related that we will also mention. But I think most importantly, from a geopolitical perspective, we have this new American administration with a very new philosophy of looking at the world. There's a new, what they call, national security strategy from the Trump administration, and that really does point to the fact that the Western Hemisphere is now, largely speaking, fair game for Washington in terms of fine-tuning foreign policy, in terms even perhaps of extracting resources. The Western Hemisphere is regarded as, the US's hemisphere in a sense. And that image I put up on the right of the screen, as you can see, that's not a meme or made up or something. That comes out of official United States sources. That's from the US Department of State, no less. So you can just see how official the thinking is, that the Western Hemisphere is ours and we will do what we need to do in the Western Hemisphere. And we've seen that already play itself out just in that first week in the new year, with the capture of the Venezuelan president and the military maneuver to get him back into the United States. I mean, a remarkable act in itself. It's followed on over the last 2 weeks or so with Donald Trump's appearance in Davos at the World Economic Forum. Good heavens, that was all about Donald Trump, as it was intended to be, I suppose, from the Trump administration. And of course, all of the issues relating to, should we invade Greenland? Should we take Greenland? How do we do it? Probably still unresolved to a large degree, but that discussion also showed just how far the Trump administration was prepared to deviate from some of the historical norms of the United States in order to secure their particular interests, whether they are strategic or, for that matter, whether they are economic as well. And we've seen in the last year or so, and longer than that, Donald Trump's desire to distance himself from Europe, particularly from providing funding for the North Atlantic Treaty Organization. There has been an ongoing and slow rift between the United States and the European powers. It's over ideology. It's over the rehabilitation of Russia. The Trump administration just doesn't simply like the more liberal attitude of the Europeans. It doesn't play into the worldview of the Trump administration. And of course, there is increasing tension. And that tension, of course, means that the historic rules of the game, where the United States and Europe provided the backbone of safety in terms of NATO, well, that's not guaranteed anymore. And if NATO isn't guaranteed anymore, then, of course, issues relating to trade and other forms of diplomatic relations are also not guaranteed anymore. And it's shaken up the world. I mean, to put it bluntly and to put it crudely, these last few weeks have really sort of destroyed that old world order, that post-NATO world. And I think it has unleashed, obviously, a high degree of uncertainty, and we see that playing itself out in various ways. Also at that Davos summit, we had a very interesting speech from the Canadian head of state, Mark Carney, in which he alluded to the fact that the United States was now on its own tack, so to speak, and that other countries, what he referred to as the middle powers, would need to act together and cooperate more closely together, particularly when it came to trade and economic well-being. And I just put on the map there, that's the quote from Carney on the right. And on the left is really a map, and it's controversial, and you could argue with it, but those are what we would call in the political science game the middle powers. These are countries that have relatively large economies, are strategically located, can play a major role. They've got commodities in many cases. They're relatively wealthy in many cases, and they can play a major role in the world. South Africa, as you can see, regarded as one of those middle powers on the African continent, Nigeria as well, increasingly Ethiopia, Egypt. But of course, you can see Brazil, you can see Argentina, and you can see India. And some of the other Turkey as sort of middle power, some of the Gulf countries as well, by the way, Saudi Arabia. And I think this is what we are going to look at, is that if the United States is a more unreliable partner, if the United States distances herself from her traditional allies for a variety of reasons, there is a chance that the other major economies of this world find each other and find themselves. So in a strange way, whilst one might critique the United States for their particular actions, this is an opportunity ultimately for these middle powers, including South Africa, to get their act together, to increase trade with one another. And you've seen that play itself out, and I'll come back to that in a moment, just in the last few weeks. Now, that's a lot of stuff just in the first couple of minutes, but there's more. But wait, there's more, as the old saying goes. We have a new global body called the Board of Peace. No one quite knows what this really means. It was, I suppose, designed to smooth the way for a new Gaza and for a Palestinian entity following the conflict with Israel. But of course, the Board of Peace has also been suggested that it's an alternative in the making to the United Nations. Good heavens, that's big stuff if that is the case, but it's early days and we'll see how that goes. We have the ongoing threat of a conflict, of course, with Iran and the United States and Israel to some degree as well. Gosh, again, another big potentially destabilizing issue. You've had issues relating to the immigration enforcement in the United States, which has caused great rifts in that particular society, and we shouldn't underestimate the instability and destabilization within the United States as well. We've got a new Federal Reserve governor who will be probably installed in the next few months or so. Markets have already reacted to him, taking over from Jay Powell. And again, you've seen just in the last day or two, the new Fed governor, the implications of him is that he's not someone who is necessarily going to force dramatic interest rate cuts into the future. And that's why you saw the gold price and the silver price commodities take something of a beating in the last 48 hours or so. All of this uncertainty, of course, when it comes to the US Federal Reserve, has an implication for commodities, as I've said, and obviously implications for South Africa as well. We've done quite well in the last year on the back of a rising gold price and rising commodity prices. Perhaps it's something of a bubble, and that bubble was going to adjust to some degree Perhaps this is the moment where the bubble has adjusted. I still think gold and silver and commodities are going to keep South Africa in the relative pound seats going forward. But the desire to increase gold exposure may well be just a little bit softer going forward. So for all of these things, good heavens, you almost feel as though the US president is looking in almost on everything that one does. And I look at my window here in my office, and I just feel as though there is his face looking in on me as well. All of this against the backdrop of increasing global rivalries, not just necessarily a Trump issue, that US and China have been, I think, on a steady path to increased rivalry, military rivalry, technological rivalry, trade rivalry. It's a world with much more competition between these big powers. It's a world in which there's rising nationalism. Yes, certainly from Vladimir Putin and Russia. There's nationalism in Western societies as well. The Trump administration could be argued to be a nationalistic style of administration as well. And there's great competition on two important fronts, and I think it'll be the feature of the world for the next foreseeable future: competition over who controls critical minerals and commodities. And I think we're seeing that battle playing itself out. The United States is about to launch a $12 billion critical mineral stockpile fund to blunt the reliance on China, who have the majority of critical minerals. So you're going to see competition on this particular issue, and competition also on the technological side. Chip wars, and from an AI perspective, who will control those aspects of the world now and into the future? They will be competitive issues. So good heavens, we are living through interesting times. These are big issues. They're not just now, as I'm speaking here, they're going to be with us for some time. Let's take a shorter term view then and quickly look at the global economy. Here's the chart, the latest chart, of course, from the IMF. The IMF charts have just come out now in January. They show the global economy ticking along relatively okay. We are looking at steady growth, 3.3% for the world over this next year or so. It's not spectacular stuff, but it's not that bad either, and we don't expect recessions in any of the major economies, certainly as I speak now. You can just have a look on the chart there. You can see the United States expected to grow at about 2.5% this year. That's not bad at all, and it's better than many predictions, good heavens. The euro area likely to grow at about 1.3%. I'll come back to some of this in a moment. But the big growth coming out of emerging and developing Asia, and also there at the bottom right, sub-Saharan Africa. So in a strange way, we in this part of the world, not necessarily South Africa, but for our friends watching from other parts of the African continent, are going to see substantially higher growth rates. South Africa always the laggard, and I'll come back to that a little bit later. And I think this obviously shows a very important shift in the world. It's a shift from the growth of the advanced economies, who will grow at lower rates, to emerging market and developing economies that are going to grow at much higher rates. And I think from a business perspective, from a new market perspective, the growth opportunities really in the future are in emerging markets and these developing economies, whether they here on our continent, and of course, whether they are in Southeast Asia and in other developing parts of the world. What we call actually in the political science game, the global south. Now, I spoke to you about the middle powers. Many of those middle powers are located in the sort of southern hemispheric parts of the world. The global south, also sort of a loose term, which includes large parts of Africa, large parts of Southeast Asia. I would also regard Brazil and parts of Latin America, global south, also with the middle powers really increasing in importance economically and politically as well. But I think the hot issue last year was clearly the issue of tariffs, which were used, I think, dramatically by the United States as a leverage, what we would call in the business geoeconomics, where you use tariffs or you use your economic power to not only level the playing fields, not only to raise money, which tariffs do for the United States, but also to achieve foreign policy objectives. If you threaten countries with high tariffs, you are asking them also to change many of their political and foreign policy decisions. And we've seen just overnight how very high tariffs on India that were implemented by Washington were done so because Trump wanted India not to buy gas or oil from Russia. And now, last night, an agreement was reached between India and the United States, where India announced that it would not be buying oil from Russia. And then, in reciprocation, the US has dramatically reduced the tariff rate on India. So tariffs are being used by the United States, indeed, to exact certain foreign policy or political outcomes. And I think we're going to see that continuing for some time. Now, I'll show you one slide. You have Donald Trump holding up a hat saying Trump was right about everything. When you look at all of these issues and you think, well, is this going to negatively or positively impact the United States economy? Well, what have we seen so far? Yes, we've seen the highest US trade tariffs in about 100 years. Those trade tariffs are raising a lot of money for the United States. They are rebalancing trade deficits with other countries, and they are also obviously influencing other countries to change their policies and foreign policy in particular. Is this having a negative effect on the world? Well, strangely enough, when we look at the economic projections for the world going forward, we've seen that most of the economic houses have increased their projections for growth across the board, even in the United States. These tariffs have not had a negative impact yet on the US economy. And in fact, we've seen higher projections for the US economy over this year. And even for parts of Europe, it's looking a little bit better, despite obviously the impact of tariffs there. We've seen data just in the last day about improvements in the US economy as well, better results coming out of the US manufacturing sector. So once again, the US economy not looking as though on these big macro figures that it is slowing down. We are even likely to see quite a large bump in US GDP for the fourth quarter. Again, showing that those who think this is going to negatively affect the US economy are at least on the wrong foot for the moment. And I do stress for the moment. So for the moment, the US economy looking quite good. Earnings from companies are still looking quite good. And equities in general, US equities continue to be quite good despite the volatility of the last few days. And you saw equities restore some of their losses just in the last 24 hours or so. Even inflation in the United States looking relatively tame at the moment. Okay, all of that looks great. I still think there are some rainy days or stormy days ahead for the US economy, despite those macro suggestions. So I could stop there and then you could say, well, this all looks good for the US. I think there are some clear issues that one would flag if you were in the United States. We've seen unemployment figures in the US look a little bit more testy than they've been before. When unemployment, it's not going up dramatically, but when unemployment looks a little risky, people start to feel a little uncertain about their future. And of course, many Americans are now not feeling the benefits of some of these big GDP growth figures that I've showed you. There is a more negative view of how Donald Trump is handling the economy. And you can see that the chart on the right indicates that Trump's policies on a variety of issues is certainly the popularity or the approval rating of Trump is down on a whole number of issues, except for border security, because Americans really do believe that border security and immigration laws need to be jacked up. But the big problem in the United States is that their consumers are miserable. I call it a miserable consumer problem. And again, we've seen all the charts show that the American consumer, their confidence in the economy is generally on the skids and has been for some time. US consumers, particularly the poorer segment of those consumers, have been feeling the brunt of rising prices in the US. And of course, tariffs also have led to grocery prices in the US going up, basics, staples. And if you're on the poorer end of the income curve, that's what you're going to feel. You're going to feel your grocery basket is that bit more expensive. I've just come back from the United States, and good heavens, basics in the US have become very expensive. Let me tell you, just to go buy a tube of toothpaste or a deodorant or a bag of coffee at Walmart is now an expensive experience compared to what it was. So, for those of you considering leaving and going to the US, take a lot of rands with you. There are midterm elections coming up in November of this year in the United States. Trump got to power by telling Americans that they would be able to have cheaper prices. Certainly gas prices, oil prices, petrol prices have come down, but Americans are paying more for certain foodstuffs and for electricity costs as well. And I'll just show the slide because we talk a lot about the K-shaped economy in the United States. The upward little slope is the people who've got money, who had done very well on equities in the last few years. The bottom slope of the K, of the tear, as you can see on the screen, are those people that just don't have access to those assets and are therefore feeling it. And it's almost as though this US economy is being subsidized. The growth is being subsidized by the upper level of those income, the upper level income, but those on the bottom side are feeling it even more. Across quickly to Europe, there's Mr. Top Gun himself, Emmanuel Macron, with his medically prescribed sunglasses. No fireworks in Eurozone growth. It's lackluster, just over 1.5% or so. I suppose it's better than recessionary growth. They've just come out with their GDP figures, and there are some parts of Europe that are looking better than others. The best performer in Europe has been Spain, ole to Spain. And some of the more central European countries have done quite well, but Germany have been a laggard, and France as well. And you can see there on this particular chart, German growth is just over 1% expected for this year or so. The UK expected at 1.3%. So nothing particularly exciting, steady as she goes in Europe. But certainly this sort of strain in the relationship between Europe and the United States is already showing itself up in new trade agreements between Europe and India. We've seen that signed in the last week or so. And good heavens, everybody now wants to be a friend of the Chinese. If the US is going to be difficult, China is going to show up the US by showing how easy it is to do business with China. And everybody has been shaking President Xi's hand in Beijing and elsewhere as well. Across quickly to China, just quickly to give you a view of where that country is. The Chinese growth has slowed over the last 10 years. It used to be 10% per annum. Now it's going to be 5%, even less than 5% for that matter. There's sort of three critical areas that are affecting the Chinese economy. Their house prices are still falling. Listen, if the value of your house kept on falling, you would be a pretty miserable consumer. Your equity that you put into your house is no longer guaranteed. And that's why you can see the correlation between falling house prices on the left and that soft consumer who are not spending on the right. I'll come back to that in a moment. And the Chinese haven't been investing as much in their own economy as they did for the last 10 or 20 years. You may just say this is a maturing economy. You can't keep on growing at those early levels of growth as China began a renaissance. And it's just settling back to become another normal economy. But I tell you, you don't want a consumer confidence graph that looks like this. Because if consumers are not spending, this affects a knock-on effect into the entire economy for that matter, and has an effect even here on our tourism industry. We expected a lot more Chinese tourists to come to South Africa. They haven't done so because they're a little bit more concerned about life back at home, and they haven't got that level of disposable income, or they don't feel confident enough to spend money on luxuries like travel. Their factory activity has contracted in the last reporting period as well, which is also negative for the Chinese. And of course, as the Chinese economy begins to slow, expected to be 4.5%, maybe even down to 4% next year, when one never quite knows. The Indian economy has been the star performer of those big economies, the developing markets. India growing at about 6.5% this year, still astonishing growth for a country of 1.4 billion people. So the differential in growth between India and China, strong. And remember, China's population is aging very rapidly, and that also creates a drain or strain on their productivity. One thing about China, though, and it's important from our point of view, China has kept her economy ticking along this year, despite tariffs and all of the other issues. They've been able to manufacture and export their way out of trouble, at least for the moment. And they've exported a massive quantity of goods. And all of you know where those goods have gone. You see Chinese goods absolutely everywhere, from going to buy a TV set or going to buy a car. In particular, here in South Africa, it's Chinese products more and more, and high quality products. This has kept the Chinese economy going, but obviously the more high quality merchandise the Chinese can export around the world, the more it affects our domestic industries, or the domestic industries of other countries as well. And that's why there's some consideration now in South Africa to putting tariffs on Chinese imported vehicles into South Africa. They come in cheap, and they obviously affect negatively our ability in South Africa to produce vehicles which are not going to the US anymore because of trade tariffs. Sure, it's a lot of issues. quickly across to the African continent before we come to South Africa. The good news is that we're on the right continent at the right time. And I think from a business point of view, this is where the business expansion should be. Africa is projected to be the world's fastest growing region over the next few years or so. Look, remember, some areas are much more amenable to growth than others. There are huge security considerations in many parts of the continent. But overall, Africa will see growth that's more or less equal to that of Southeast Asia. And that's a historic moment for us on this continent, that many of our brothers and sisters living to the north of us are really showing good growth rates. And we can only be envious, I might add, of some of those good growth rates coming out of Kenya or Rwanda or Ethiopia or elsewhere as well. And you can just see the projections for trade between global regions of this world are really in favor of sub-Saharan Africa over the next 5 years or so. The chart on the right will indicate that trade to our region, which is region 2 there, is going to increase substantially. And along with Southeast Asia, the focus of the trade routes of the world are going to be in and around Southeast Asia and sub-Saharan Africa. So there's a fair amount of encouragement from our side as well. Okay, now to the meat and bones, I suppose, of this South Africa. Little stormy, as South Africa always is in that particular image. It's an interesting time for us in South Africa. We have a president who is presiding over a minority government. And I think the difficulties for the ANC in this and getting used to the fact that they're a minority party has been quite a difficult pill to swallow, as the old saying goes. Look, South Africa has come off a low base, and there's no point in beating around the bush on it. We have seen pretty poor GDP growth. And what's important about this chart is that our growth has been so poor, it hasn't kept pace with our population growth. So when your economic growth doesn't keep pace with your growth in your population, you are just compounding economic hardship. And in particular, you are compounding the unemployment problem for all of those thousands of job seekers who come on the market every single year. So from a big long-term structural perspective, we've really been at a low ebb for the last 10 years, if not more. And when you don't grow enough and your population grows, your GDP per capita drops, and it trails the world average as well. And again, you can just see, and I've got all the charts to show how we just haven't been competitive in terms of upping our GDP and upping the personal wealth of South Africans in particular. And this has led to an ongoing, and I'm going to get old talking about this, unemployment crisis. We've got a youth unemployment crisis in South Africa. About 60% of those under 24 are unemployed. And that to me is that's the most serious issue in South Africa, because it has implications for social stability in South Africa and obviously for crime in South Africa as well. Not to mention the fact that for people that are not economically active, they're reliant upon the state, they're a burden upon the state, and they don't contribute, obviously, to revenue collection as well. So there's a myriad of issues relating to this, and we are still, don't get me wrong here, and I'm going to give you some positive news, but we are still very much in a crisis when it comes to employment. And when we look at the comparisons between South Africa and other parts of the world in terms of how many South Africans are employed compared to the total population, you see on the chart we are very low. These are compared to other countries, similar countries to ours, by the way. 39% of our country are employed. But I mean, have a look. You'll see in Vietnam, 73% employed. The overall averages are about 60% employed. Brazil, 60% employed. So we've got at least 20% of our potential population, 20%, that should be in some sort of employment when compared to many of our peers going forward. Structurally, we've been affected also by a lack of fixed investment into the country. Government investment, private investment has been relatively weak because of policy constraints, political uncertainty, Eskom-related issues. I'll come back to this in a moment because the tide is turning here, I'm pleased to say. And our infrastructure, of course, has held us back. Inefficient rail has led to an increase of reliance on road freight, with a huge backlog, for that matter, on both road and rail. And dare I mention it, for those of you around the country well aware of the infrastructural collapse of many of our key metros, and in particular the water supply as well. We haven't been able to invest domestically in many instances. Private business investment has been low. And that obviously also means that there are fewer opportunities, fewer employment opportunities for South Africans. And this is a chart that just correlates. When you have lower investment, you also have lower employment opportunities as well. You don't need to be an economist or genius to figure that one out. And I think lastly on this one, I'm not quite sure, there's always some more last negative ones from me, by the way. We've got a very restrictive regulatory burden in South Africa. It just takes far too long to start a business. There's too much red tape. There are also issues relating to ownership issues in our society of businesses. And that puts South Africa almost in one of the worst countries when it comes to market regulation indicators in this chart from the OECD. So it's not just me being critical. This is how the global agencies are analyzing South Africa and seeing them. And all of these point to the fact that we just don't utilize our assets properly. We're not utilizing our manufacturing capacity properly. And if we were, and if we could tweak this just a little bit in terms of ease of access, in terms of labor regulations, I think we'd see quite a substantial turnaround. So I don't think it'll take too much to turn around some of these issues, but there has to be political will, as the old saying goes. And on top of all of that, we've got the macro issue of a more assertive Trump administration looking to pick a fight, certainly with South Africa, for a variety of reasons. Now, good heavens, there are a variety of reasons why I think the United States is distancing herself from South Africa. South Africa haven't made it easy for the US over the last number of years. South Africa has been skeptical of the West in general. They've been skeptical of the United States, and on a whole host of foreign policy issues. South Africa's cozying up, in a sense, to China in the BRICS. South Africa's close relations with Moscow, South Africa's close relations with Iran in particular, and a variety of other issues relating to the Israel-Gaza conflict. Look, these have all together played into the distrust that the United States has now for South Africa. And there is already a review mechanism in Washington to review the relations between South Africa and the United States. We haven't yet had the final details of the renewed AGOA agreement that has been renewed, but whether South Africa will be able to benefit from this, I don't know. Given the tensions between South Africa and the United States, it would surprise me if South Africa is included as an AGOA beneficiary. It would surprise me. But our teams are negotiating with Washington, and if there's a deal to be done, maybe they will get around this level of strain with Washington in particular. The US is an important export market to us, but remember that most of the trade restrictions apply to our automobile sector and to our agribusiness to some degree. Our metals and minerals that go out in big numbers to the US are not affected by the tariffs at the moment. They're regarded as critical commodities for the United States. So what we lose, in a sense, on automobiles to the US, we're going to have to make up elsewhere, and we will be looking at trade agreements. We're already involved in trade agreements with on agricultural products with Vietnam and with other parts of Southeast Asia and China. And of course, closer relations with the European Union can make up for some of that lost trade with the United States. So it's not as though it's a complete negative. And again, as I said before, the strain in relationship with the US on trade really will translate into new relationships between all countries of the world, for that matter, new relationships. And I suppose there's nothing wrong with that in the broad sense. Now, those are the negative remarks really about South Africa. And in the next 10 minutes or so, let's have a look at some of the green shoots that I think are emanating. Now, let me tell you, I've done a lot of presentations over the years, and I've never used a green shoot graphic like this. Maybe you can even hear the sound effects here of this green shoot graphic. So the fact that I'm using a green shoot graphic is relatively good news for us all. Let's see what I mean by that. Look, politically, we've had a high degree of stability despite the tensions and strains in the government of national unity. And I think behind the sort of foundation of the green shoots that we are seeing has been political stability. It's been the forced marriage, in a sense, to work together for all of these political groupings, different backgrounds, different ideologies. But there's been a compromise. There's been what I would call an elite compromise, yes, at the top. But the more extreme nature of all of these political parties have had to be set aside in order to work together in the government of national unity. And I think that's having an effect. Now, I could say that without showing you the empirical data, but I'll show you the empirical data because by now, for those of you watching me, you will know that I like charts and graphs. All you need to know about all of those fancy lines on the screen, on the left-hand chart, shows that our growth, our GDP growth, coming off an incredibly low base, is starting to show some life. So we're starting to see growth come through on a quarter-by-quarter basis. We are not staring down a recession, and that's important. So it's off a low base, but GDP looks better. On all of the other measurements that would indicate the health of our economy, we are looking at a better results. Now, I'll come back to these in more detail. You can see the chart on the right is a composite of all of them. Consumer confidence, business confidence. Let's have a look at one or two of them more in detail. We've just had the data in terms of the business activity in South Africa, business activity, which includes the Purchasing Managers Index and new sales orders in business. This just came out yesterday, by the way. And again, look at the right hand of the chart. It's looking better than it was. It's not in growth. It's not substantially in growth territory. It would have to be above the 50-point line, but it's better. It's coming off a bottom. And I think that's all one can hope for at this point in time, is that we reached the bottom and we should be seeing a modicum of improvement as the business cycle now shows. All the research houses show that our GDP growth should improve. Some are more conservative, some are a little bit more optimistic. I think we'll reach growth of perhaps 1.5% this year, which is better than the average of 0.7% over the last 5 years or so. So you've got to take what you can out of that improvement. Our private sector is at last starting to expand investments, and the value of new projects have risen by about 16% in the last year. That's relatively good news for the building infrastructure industry in South Africa, and obviously is a potential job creator down the line as well. It's a positive chart in the right direction as well. And our GDP ultimately benefits from an uptick in capital investment. That's what's been lacking in the last decade or so. So it will also compound into more stable and upwardly pointing GDP growth for the country. Inflation in South Africa remains in range at lower levels, and this should encourage an interest rate reduction. I thought there might have been one already. I would have liked there to have been one already this last week. We've got a very conservative SARB, which does have its role to play, I'm pleased to say, but I hope there'll be at least one or even two interest rate reductions during the course of the year. Hopefully also with better growth and better income from taxes on the mining industry, thanks to a higher gold price, long may that last, we should be able to stabilize our debt position in South Africa. And this, of course, every year one talks about this. The budget is coming up in a few weeks' time. We'll see how the forecasts are for this. We have to bring down our debt to GDP because we spend too much money on repaying our debt, and that means we can't actually invest in social services and other critical areas of our economy going forward. So we've seen business confidence rise in the last quarter, and that's better than it's been before. Business costs, thanks to lower inflation, are at multi-year lows. That's good for business who are now able to borrow and expand their business at lower cost. We've seen a bit of life breathed into our construction, our civil construction industry as well. Again, you can be critical, you can be negative, but let's have a look. Some of these charts are looking just that little bit better than they were. We're off that financial grey list and off the EU's high risk list as well, which allows more capital to flow into South Africa without an added layer of scrutiny, which is a positive. I like this chart, by the way, because I'm from Cape Town, and I like this chart. It was applicable a few months ago. Amazing how things change. The famous Table Mountain South African exchange rate chart. Of course, the rand now at just 16 plus and strengthened a bit there. But hey, I just like this chart, so I'm going to show it. I like showing this chart to foreign audiences to show them. Table Mountain is also represented in the currency charts as well. But the strength of the rand in the last while also helps keep inflation relatively low. I know it's a little problematic for the guys exporting, but I think the rand will settle at levels that are a little bit more acceptable to exporters, around hovering at about 16 at the moment, as the dollar has strengthened just a little bit in the last few days or so. Our equities, particularly commodities, have been doing well. Listen, if you've invested in non-commodity shares in South Africa, look, I think I have to say our retailers who haven't done particularly well, you're not going to be spending any more money on a Chinese car this year. But if you've invested in commodities, right, you would have had you've been on a good wicket, so to speak. We've seen progress when it comes to the public-private cooperation, the work streams in Operation Vulindlela. And there we can measure that impact over the next few years or so. You've seen energy reforms. We've seen logistics reforms. I'll come back to that in a moment. All of that should also add to our GDP over the next 10 years or so. As long as there's continuity, you've seen this improvement, by the way, in terms of the ports, Transnet getting up and running again, more stability in our electricity grid. And again, you can plot this for our state-owned enterprises. The performance of our state-owned enterprises coming off terrible lows, just looking that little bit better. There's a long way to go. I'm not going to sound too enthusiastic here, but it's just a little bit better. And it's thanks to the public-private participation between the state and the private sector. It's cost the private sector a fortune, by the way. And it has to last. It can't just be one political cycle. There's got to be continued buy-in from the private sector to help the state. And that's a political issue that hopefully will be there. Transnet freight volumes are all looking that little bit better. Again, you can just see off very low, or sort of low base, you're seeing a modicum of recovery in terms of the export of our iron ore and coal. So we're getting our stuff to the port to export. The ports themselves, which were disastrous, and in many cases still are also showing some signs of improvement with greater efficiencies, better turnaround times as well. But a huge amount of money still has to be invested in infrastructure, particularly rail infrastructure, over the next 5 to 10 years or so. But look, there's a general view that Transnet's worst days are over. And even when it comes to Transnet raising debt, their recent debt issuance was oversubscribed, which shows general global interest and a degree of confidence in this key part of our economy. There's policy reforms in South Africa to increase the public-private mix in terms of our ports, and we're going to get new private sector freight rail operators, which is an ideological shift for the ANC and a very important and welcome one as well. And of course, there is work being done on expanding the nuclear aspect of our generation capacity. That's a long time in coming, but listen, it's showing signs of life. Finally, so what you don't want to do is you don't want to politically upset the momentum. And there is momentum. As I say, this is not the Singapore of Africa. There are other parts of Africa that are much more like the Singapore of Africa, by the way, not South Africa, not yet anyway. But politics is important. Local government elections are coming up. I would imagine in November of this year. It'll be around that particular period. Lucky you, we've got 500 participants on this particular webinar, and there are going to be about 500 political parties contesting the election. Each one of you can vote for a different political party. How's that for choice? What a democratic system we are in. But the trouble with elections is that people start to say silly things, everybody. And if you're going to start bringing up these old issues of land expropriation and nationalization of the Reserve Bank for political ends, it's not a confidence builder. So I just warn you that you're going to hear a lot of rhetoric from all sorts of politicians. Some of it might be not particularly wise at this juncture, or ever for that matter. This is the picture of our government and national unity. Nice big family picture. It's a bit like going to a wedding. They all get together to smile, and once they leave that picture, they badmouth each other entirely. Yeah, it's been fractious at times between Steenhuisen and Ramaphosa in the last year or so. It probably still will be fractious. Particularly as internal party dynamics play themselves out in all of our major parties. So the ANC has got its own headaches. It's got an increasingly fractious alliance with the Communist Party, who are going to contest local government elections independently, and therefore potentially reduce the ANC's vote or ability of the ANC to win outright. Within the DA, yeah, you've got a sort of eye-scratching John Steenhuisen, who has facing some internal demons of his own, and is facing an internal potential election challenge at the DA's conference in April. You've got Mr. Malema, who's facing the possibility of some sort of jail sentence as well. He said he will rule the EFF from jail if he is convicted indeed. Good heavens, all of them have got their own issues going forward. We are going to see a highly contested and fragmented political terrain over the course of this next year. The ANC have never performed well at local government elections. They performed more poorly at local government polls than they have at national polls. So that really puts pressure on them, especially after their last very poor showing last year in 2 years ago in 2024. And again, chart's too complicated for you to all look at on your screens or wherever you're watching this, but I think you get an idea here. The green line is the ANC support over the last 25 years or so, at about 40% in the last election. So the ANC has dropped dramatically. Just the blue line is the DA support, by the way. And the DA hasn't dropped. It hasn't risen for that matter. It's been pretty static. So the DA also has to somehow up its vote share, because it's not going to be the major party of South Africa if it continues to stagnate this way. And that's why leadership in the DA becomes so important, as it does for the ANC. Both the ANC and the DA actually have similar problems, and they can probably sympathize with one another despite their historic animosity. South Africans are generally not happy with the way South Africa is being run. The polls show that a large majority of South Africans feel the country is on the wrong track, and in particular on the wrong track about how their municipalities are performing. It's this issue of corruption and poor service delivery and potholes and power cuts and water outages at a local level that's really demoralizing South Africans, along with issues relating to job creation and criminality as well. And the dissatisfaction levels of our municipalities really point to the fact that voters are going to be fed up. I was going to use another word, fed up with existing political parties. And they're probably going to look at supporting smaller parties in greater number than ever before. So we're going to see a lot of voters who are fed up with high utility bills, with all of the other high costs. They're going to vote with their crosses, and they're going to vote, I think, for smaller political parties. Voters are fed up with high electricity costs. That's going to be an issue in this election, and you're already seeing it in terms of how some of the politicians are positioning themselves going forward. The polls for currently in South Africa show that the ANC support has dropped from 40% a little. The DA support in this poll shows that it has gone up quite a bit. I'm a little skeptical of some of these polls. We haven't had one this year. Let's wait and see where we are. I think the leadership issues in the DA can affect its ability to grow, and the general dissatisfaction with the ANC is likely to also keep its support levels relatively low. We analyze by-election results to see whether the polls make any sense. The bottom line is the ANC has been losing support in by-elections over the last 3-4 years or so. The DA has kind of kept pace. It's been the smaller parties who've been gaining ground, and that's going to mean more fragmented politics for us. In Johannesburg, of course, it's a different story. A high-profile DA candidate like Helen Zille can, in fact, boost the DA's vote share in that particular city, but she herself will find it difficult to gain anywhere near a majority and would have to cobble together another messy coalition going forward. So it's not plain sailing for her either for the moment, and we don't even know who the other candidates from other political parties are going to be. Johannesburg is the battleground for this year, and it will set the scene for the 2029 election as well. Johannesburg is the symbolic financial center for obvious reasons. The resources of all the parties are going to be concentrated in Johannesburg, and this will be the PR victory, either for the DA or for the ANC, or for Mr. Mashaba, or for someone else for that matter. And that will be a springboard for whichever party to work on for 2029. By the way, there's new legislation in the offing that will prevent smaller parties from running our metros or being part of the executive council of our metros. So if that goes through, it will stabilize some of these metros that are susceptible to smaller parties party hopping and getting kickbacks from some of the bigger parties. So everybody, in conclusion, and I've been going for 47 minutes, in conclusion, it's a difficult year and a risky year for Ramaphosa and the ANC. Ramaphosa faces an internal election. His term of office is up as ANC leader in 2027, and these candidates and others are already positioning themselves to take over as leader of the ANC. Some of them will be more pro-GNU, some of them might be more pro-EFF or non-GNU, and that's going to play itself out in the following year or in next year, which we will talk about at another stage. But it heightens tension within the ANC because these guys are going to position themselves. And if the ANC does badly in the local government elections, well, that opens the field for a whole host of these candidates to say, listen, Ramaphosa failed, I'm going to do a better job. So watch this space there. It's an exciting time, I think, for us all, frankly. There are green shoots for South Africa. It's a more difficult global environment, but that difficulty doesn't mean that the opportunities don't exist. I think the opportunities do. And I think from a global perspective, South Africa may be relatively well positioned to fit into that middle power story that I've spoken to you about, to look at new trade agreements with other countries who are also looking to do the same. And that's where I think there can be great benefit to the shifting United States position in the world. On our domestic front in South Africa, green shoots, yes. Africa is on our doorstep in terms of economic growth and opportunity, and I still think that's where we should be looking, along with Southeast Asia and other parts of the world. Politically, it's a more, I think, competitive year coming. And it's a more fragmented political year as well, in which all of the major parties are going to feel some relative strain going forward. And I suppose we, in our muddled way, will have to work our way through that particular issue. And I think this position will change substantially by November anyway. So look, I think the act, or the curtain really, is up on what should be a promising year for South Africa. It should be a promising year, as long as the political stability continues and allows us to cement the momentum that I have spoken about, and therefore sort of lift the curtain on a better 2026 and into 2027 as well. Thanks very much for listening to me.
Daniel, thank you very much. I see you getting lots of rounds of applauses and a few hearts from the ladies. And wow, what an amazing collection of really useful insights and information in under 50 minutes. So well done, and thank you for sharing all of that. I think there's a lot to take in. I said if there are a few questions, I'll try and ask maybe just two questions. Daniel, one question from me really is, as a South African business and maybe in the insurance industry, from all of this information, summarize it into one or two opportunities. So clearly investing in Africa is interesting with the African growth. Sectors such as renewable energy and energy reform, maybe in transport. What else would you be positioning yourself as a South African business and as an insurance business where you're taking risk? Give us a few more insights in the opportunities.
Look, you're better positioned than I am, because I'm the talking head guy. You the guys are going to have to take this information and find out exactly where the sectors are. Look, I mean, I like infrastructure. I think from a South African perspective, the big focus is going to be on infrastructure. The infrastructure here has decayed substantially for the last 10, 20 years, in fact, for longer, frankly. We've had insufficient inward investment in that. So across the broad range of infrastructure, whether it's the logistic networks, whether it's the improvement of our urban infrastructure in particular, that to me is where the opportunities really lie. There are fewer opportunities in the consumer-facing areas of our economy that are still lagging substantially. And I think, from an infrastructure development, secure infrastructure as well, that to me is the big focus area for me, along with transportation corridors that form part and parcel of that. Getting goods from place A to place B has been one of the critical bottlenecks that has held us back here. And I think that's where the big opportunity is from an investor point of view.
Thank you very much. One other question that we had early on, and I'll keep this as the last question, is you mentioned critical minerals. Could you just highlight for the audience, what are the critical minerals that we need to be thinking about and watching out for?
Well, there you go. When you've got 100 charts in a presentation and you take one out that had the list of all of these minerals, of which I must tell you, most of the audience, including myself, would not have heard of the particular names of these critical minerals, but critical minerals increasingly are used in high tech and technology. And we have critical minerals to some degree in South Africa. But these are minerals that will go into cell phone technology, computer technology, microchip technology that is critical as these technologies expand and become strategic assets for countries. And without these critical minerals, these technologies simply will not exist. Now, the big issue here is that critical minerals, about 60% of them overall, are to be found in China, and even more of those critical minerals are actually refined in China as well, leaving the United States reliant upon the goodwill of China. There are pockets of critical minerals here on the African continent, particularly in the Democratic Republic of the Congo, I might add. And I think we're going to see the United States look to secure increasing economic cooperation with African states that have access to these minerals going forward. So the interest from the United States will be to secure her share of critical minerals into the future and become less reliant upon China. And I might add, there are also critical minerals to be had in Greenland. So the Greenland story is not as crazy as it might seem. There's a high proportion of critical minerals that are up for grabs on that particular ice mass as well. But critical minerals are going to be frankly, they'll be the new water or the new oil of the next 10, 20, 50 years as we see it at the moment. And they are going to become a political flashpoint as they have at the moment. And if you want the names of the actual minerals, Justin, I will get you a wonderful chart on those particular minerals, and you can get tongue-tied practicing them before you give your next presentation.
Perfect. Let's wrap it up there, Daniel. Thank you so much for your amazing insights. We had up to 700 people listening in today on this iTOOsday, the first of the year. So that's a good sign for the year. And as I2, we're going away next week, as I mentioned, to talk about our strat, to formulate our plans. And we're actually talking about a vision 2030 as I2. So once we're back, we will share more insights with all of the iTOOers, our partners, and our brokers. Thank you for the first iTOOsday. It was a good one. Let's go out and conquer risk and unleash the potential of this African continent. Thank you very much, everyone.
Thank you.
Thank you so much, Daniel. That was really good.
Thanks, Justin. Thank you. We managed to get through that. I didn't think I'd managed all of that stuff in 50 minutes, but there you go. So thanks very much.
Yeah, cool. We'll keep in touch. We'd love to
keep in touch,
to you again.